While everyone's been watching Ethereum's next upgrade, a new Layer 1 contender, flush with VC cash, has quietly landed a deal so big it could shake up the entire tokenization space. Today, we're exploring why sharp Ethereum investors are suddenly looking over their shoulders at Mavryk Network and what it could all mean for the value of your ETH. Welcome to Generational Wealth, your pathway from knowledge to legacy. Quick disclaimer: I'm not a licensed financial advisor. This is for educational purposes only. Crypto is volatile. Never invest more than you can afford to lose. Do your own research. Let's be clear, Ethereum's position is powerful. It has the biggest DeFi ecosystem and gets nods from giants like BlackRock. Billions in tokenized assets already call its blockchain home. But that size? It's also a challenge. For investors, Ethereum is starting to look more like a stable, mature giant, which often means slower growth. High gas fees are still a headache during busy times. And let's be honest, in crypto, the king is always a target. Hungry challengers are constantly searching for a weakness, and for the multi-trillion-dollar RWA market, a specialized approach might just be the key to the kingdom. This is where Mavryk Network steps in. It's a Layer 1 blockchain built for a single purpose: tokenizing real-world assets. Instead of trying to be everything to everyone, Mavryk wants to be the specialized foundation for this massively growing market. And they're not just making promises. The project has already locked down over $5.2 million in funding from prominent VCs. More importantly, it just signed one of the biggest RWA deals ever: a partnership with Multibank Group and MAG Lifestyle Development to bring over $10 billion worth of luxury real estate onto its network, including the famous Ritz-Carlton residences in Dubai. This isn't some future plan. It's a done deal that brings high-value income-producing properties on-chain. Mavryk's tokenomics also seem designed to reward a long-term vision. With its token launch set for this month, September 2025, the initial circulating supply is expected to be small. The project has indicated that a significant portion, potentially over 45% of all tokens, will be set aside for ecosystem growth, suggesting a focus on building something sustainable. Okay, before we put these two head-to-head and dig into the bull and bear cases, if you're finding this breakdown useful, do me a quick favor and hit those like and subscribe buttons. It's a huge help to the channel and makes sure you won't miss what's next. So from an investor's point of view, how do these two really compare? It's a classic David vs. Goliath story. Ethereum has a market cap in the hundreds of billions, while Mavryk is just starting out. If it launches with a market cap of around $35 million, as some analysts predict, you can see the huge asymmetry in growth potential. Even a small shift in the market could mean a massive re-evaluation for Mavryk. Their strategies couldn't be more different. Ethereum is the general-purpose superhighway, where RWAs are just one lane of traffic. Mavryk is a specialist. Its entire system is built to handle the tricky parts of regulated real-world assets, from legal compliance to final settlement. While Ethereum draws in big money with its deep liquidity and brand recognition, Mavryk is making surgical strikes, securing partnerships to bring enormous, traditionally illiquid assets into the digital age. So, what's the argument for going all in on Mavryk? The bull case is pretty clear. You have a blockchain built specifically for a trillion-dollar market. It has massive real-world partnerships already signed, guaranteeing assets will flow into its ecosystem. And with a potentially tiny market cap compared to Ethereum, the room for explosive growth is obvious. The team is also aiming high, with a public goal of expanding the on-chain RWA market to $40 billion by 2030. But we have to look at the other side, too. The bear case is very real. Mavryk is brand new. Its mainnet is scheduled to go live on September 18, 2025, and its ecosystem is a fraction of the size of Ethereum's. This introduces a ton of execution risk. Can they actually pull off these ambitious plans? And while its decentralized governance sounds good, it could slow down crucial decisions. Ultimately, long-term demand for its platform is still an open question. So why are Ethereum investors keeping an eye on Mavryk? Because it's a focused, asymmetric bet on the future of tokenization. Ethereum is the reigning champ, the blue chip of the crypto world, a safe investment with a huge defensive moat. Mavryk is the scrappy startup. It's definitely the riskier option, but it has a crystal-clear strategy to carve out a huge slice of a very valuable market. Its success is far from guaranteed, but that landmark real estate deal proves it's a serious contender that you just can't ignore. The question for investors is shifting from who will win 2. How much of the pie will each one get? But I want to know what you think. Which horse are you backing in the RWA race? Is Ethereum's network effect just too strong? Or does Mavryk's specialized focus give it the ultimate edge? Drop your thoughts in the comments below. For more information, visit our website at generationalwealth.biz. Thanks for watching.